What's going on, everybody? It is DC Trades here, and today I'm going to be doing a trade recap video for NQ. So I'm just going to be doing my analysis, or just showing you guys how I do my analysis every morning when the market opens at 9:30. So let's replay this, and I'll show you guys what I was seeing at 9 o'clock right before the market opened. So let's see right here. All right, so right now we are on the 1 hour on NQ. And what I do is at 9 o'clock, so right now the most recent candle is at 8 o'clock. It's fine for now. We'll just have it like that. I start at current price, I look left, and I go up to try and find my supply and demand levels, or also known as my institutional order levels. All right, where are the institutions coming in and where are they coming out? Right here we have a nice little rally based drop, area of institutional selling, supply level up here, but it's already been hit. Look at that, that's the first hit right there. Looking left, we could see that it's a retest of this supply level. So once we have a level that's a retest of a previous level, that just weakens our zone a lot in terms of purity. But I'd look at other things to determine whether or not my supply or demand level is still a very strong level. But right now, I'm seeing that it's a retest of a previous level. In this case, I would drill down to the smaller time frames and see if I have anything better on the smaller time frames. But right now we're gonna try and find some demand. So look at all this. Like, this is all basing candle. Like, when we have basing candles, that means there's an equilibrium of equal buyers and sellers at this price range at this time. And that's what a basing candle is, equal buyers and sellers. Once we have an imbalance in order flow, for example right here, where buyers won, the sellers lost, and price goes up, because more buyers than sellers, price goes up. We have an equilibrium, and then boom, a big move. But looking at all this structure, wow, we've had a lot of time to fill in orders. We have multiple demand levels that are just hit and hit and hit. Look at this demand level. Just been hit way too many times. It is a demand level, I can't ignore it, but I have to grade these levels, and this is a very weak level, so I would not trade any of these demand levels just because of how weak it is. And looking left, more demand over here, demand over here, demand over here. Big wick, very terrible structure, nothing that I like. I will drill down to other time frames. I look at 3 time frames, guys, but sometimes if price is not clear on one time frame, I will go to another time frame until I have something that's more clear. And on the 4 hour, this is our demand level, right? This is our demand level, because we have a rally base rally, and this demand level is just too beat up at this point. On the 4 hour, I would not trade this on the 4 hour. Just look how it wicked through, and look at how many times it's been hit. But when I go down to the smaller time frame, I try to find better structure. The best structure we have here on the 1 hour is this. We have a rally based rally. It's already been hit once, twice. I'm not trading that again, especially on a fast moving asset class like futures. I'm only trading first hits, or I try to only trade first hits. And if there's more than one hit on a certain level, then I would just wait for confirmation to and see price react from certain levels and try to trade in the direction that price is telling me or showing me that it wants to go. Nothing here on the 1 hour. Let's go down to the 15 minute. This is going to be our intermediate time frame, and this is also where we determine trend, right? But right now, let's look at for supply. There's nothing for supply on the 15 minute. Drove back here. We do have this little level of supply. And then if we go back to see if it's a retest of a certain level, oh man, we got to go all the way back, and it is not. Outside of that multiple time frame correlating supply level, we have this supply level on the 15 minute, but it's a standalone 15 minute and it's a red candlestick. Even though it is a drop base drop, it's a red candlestick. I want to see green candlestick pushback, probably in the 5 minute or something, but right now, not looking really the best for me. I'm not going to really look into that level. I only care about the best levels and the most recent levels. Nothing in terms of in the 15 minute for supply other than this level. And then for demand, where do we have demand? We have all this, but it's just terrible. Like, there's no good structure. The only good structure that I have really is this one, where we have a rally base rally right here. Rally base rally. We came in already, but look at the first time when we came into the level. Look what happened. We just came all the way up into supply, right? So that's why I like first entries and first hits, because after the first hit, we tended to usually get into the zone even deeper. So look, we got pretty deep right here, and then just wick through it. This is like what, the first, second, third hit right here on the zone. Just wick through. You would have been stopped out if you came in for a re-entry. That's why you wait after the zone has been penetrated so deeply, or it's been hit multiple times. You wait for confirmation to enter. And even though it did respect, I would not have gotten in this trade. Right, so right now we don't really have much as far as demand. Every single demand zone that I'm looking at has been beaten up, right? Everything has been beaten up. But right here, now I go down to the 5 minute and I try to find my best supply zone. And we have supply zone right here, but that's just a retest of this supply zone, right? So it's already been hit. It's more likely that this level is going to get broken, especially if it's just a 5 minute. It's just too small of a time frame. If I'm going to be trading levels, I'm going to want multiple time frame correlations, because I do not like trading standalone 5 minutes or standalone 1 minute or standalone 15 minutes. I want to see 15 minute, 5 minute correlating with the 1 hour. If not, then just a 15 minute or a 5 minute correlating structure. Or if there's any other correlation at all, then that justifies me taking the trade or not, then I will take it. And if the risk to reward is good, I'll take the risk to reward. And right here, I'm not trading any of these supply zones. This is a supply zone, but if you really look at it, it gapped out. So that means we have a drop, base, drop. We come back into the supply zone, and then we shoot down. So this level's already been hit. Not interested in that level. And we have a nice clean level right here. We have a beautiful impulse, balance, impulse, rally, base, drop. We broke through the oppositional leg in. This caused a trend change. Right now, we're going down, and if we come back into this level, I would like to go short. On the 5 minute for demand, oh wait, why did I delete that? I need that. I can remove this. And on the 5 minute for demand, we do have this level. Not really the best, not really liking that. Plus there was consumer confidence or whatever that came out today, and it came in lower, so the price did drop from that, and just there's nothing for demand for me right here other than these levels. Oh yeah, this was a level that I was looking at too on Monday. Actually, I had my eye on this level. We just never came back to it. And we do have this level, and I can't ignore it. It is a clean level. It's not a retest of anything. Even though it is just green, we have a drop, base, rally. It is green. I want to see red candlestick pullback like this one, where sellers got wiped and buyers came into control and pushed price up. This is a drop, base, rally, but this is a green candlestick, not a red candlestick. I would have liked it if it was red. But I mean, maybe in the 1 minute there's something, so I would confirm. I'll go down to the 1 minute and confirm if we have that red candlestick pullback, and we do right there. Okay, so it is a valid structure. I'm not going to draw it out on the 1 minute because of how far back it is, but we have two major levels right here and right here. Multiple time frame correlating structure. If we were to come back down there, I would like to go for longs. right? But I would take my entry right there. As far as risk to reward, whoops, that's the wrong one. Where would I take profits? I actually missed this trade. I'm so sad I didn't get in this trade, but I did have my levels drawn out, and I was looking at this possibly to come out like this. As soon as it hit 9:30, it just shot up. I looked away for like a second, literally. It shot up, entered me in, and then it just continued to drop down. So this is what I'm talking about, guys. This is what happened today. So I'm gonna wait for 9:30. As soon as it hits 9:30, you'll see what happened. Boom! Look at that. This is at 9:30. As soon as market opens, look where we come in. Isn't that crazy? Look where we come in. Right there. Right where multiple time frame correlating structure overlap each other. Beautiful rally base drop on the 5-minute. And you can see the amount of sellers that stepped into the market right at this price point. And when we come back into this level and fill the unfilled orders of the institutional banks that entered at this price level, they're not done selling this thing. They're still selling it. So when we come back into this level, oof, just wait and see what happens. Like, look. Boom. This was at what, 10 o'clock? I think that's when the news came out. And we just, look, by the way, look how we reacted from this demand level that I just drew out, right? The first time that we come into even though we wicked it pretty deeply, this is a multiple time frame correlating structure. So you have to think of all this green as a range. You can't just draw this out alone, because you have to be aware of what's happening in the higher time frames. But you can see, even though we wicked out, we came in, came out, and closed inside of this 5-minute demand level correlating structure, right? Correlating demand level. And then when we closed inside of this level, we came out again for the second time, and then just came up. And we came up, formed the top wick, and then we just shot right down into that other demand zone that I was just showing you guys, right? And I did enter somewhere around here. I believe on on the 1 minute, I was in the smaller time frame trying to find an entry, and I ended up getting stopped out. Just because of how, look at that. Just keeps wicking out the level, and then it just shoots up right after this. Boom, look at this. Boom. But where did it react from? From this demand level right here that I drew out, right? Now, what I should have done for my entry right here is after the first hit, remember, when it's the first hit, I will sell, I would put a limit order, which means if price comes down to that price level, it will enter me as soon as it hits. But let's say that price is below where I want to enter. For example, I want to enter as soon as we come out of this 5-minute demand level, right? After the second hit. So I would wait to see for price to turn inside of the level, or I would set an order in the middle of the range. Or what I would do is I will, once we're in the range and I expect price to reverse, I will set a buy stop order, which means if price is below where I want to enter and I expect price to just shoot up, then that's when I will put a buy stop order to enter me as soon as price goes up. Now, I didn't do that. I did enter on like a 1 minute demand level or something like that. I don't really remember, and I did miss this trade, but look at just what happens. And I was waiting for a re-entry somewhere, and it just didn't give me anything at all. So I could have been late to the move and entered somewhere around here and still made profit, but that's against my rules, guys, right? That is not what I would do, because then those are just bad habits. If you don't stick to your rules and you're constantly breaking your rules, then that's a bad habit. And when you do bad habits and you do something that you're not supposed to do, then you're going to keep doing it. And then it becomes like a normal thing, and you don't want that when you're trading. You want to stick to your rules. You want only A plus setups. You don't trade off of hunches. You trade off of strategy, off of off of risk management, off of your plan, and based on what price is telling you to do. All right, and I did find an entry somewhere around here. I was late to it, but look, this is where I was looking to enter. I was late just because I was unsure of what was going on. Also, we were also inside this supply level on the 15-minute. So so one thing you should never do is like sell inside of buy inside of a supply level or sell inside of a demand level. But since this is only the 15-minute, it's really weak. Plus, we have a lot of buying pressure coming in, right? And on the 15-minute, we have this base rally. On the 5-minute, we have all this basing candle. This is the best basing candle that I found. The only issue with these basing candles and this in this demand level is that this is a nice basing candle, right, on the 15-minute. But when I drill down to the 5-minute, it's just green continuation, like all impulsive candles, no red at all, no pullback, no sellers really stepping into the market where buyers just completely demolish them. But if we drill down to the 1 hour, I would like to see some sort of red candlestick pullback on the more detailed time frame, which is the 1 minute. Now, I don't trade off of the 1 minute, but if I do see it aligning with multiple time frames, then I would trade that. Like, this was a level I was willing to trade. And look at this, right? We have an impulse, balance, impulse, area of institutional buying, multiple time frame correlation, right? It is not a retest of a previous level. I guess it is a retest of this level, right? It is a retest of that level. But all this is just terrible price action. Like, if I were to trade, I would not have traded any of this on the 1 minute. This is the better structure, by the way. This is just a better structure. And anyways, either way, we already hit. That was the first hit of this supply zone. Even though it is a retest of a previous level, this did cause a break of the oppositional leg in, which is right there, right? So this move, this basing candle caused a break of that previous high on the 1 minute. We came in and then boom, we just shoot up, right? So those are 2 trades right there, and I'm not even done. It's gonna come back. Watch. That is still a very strong level. Even though it's only been hit once, look at the second time that we come back into this level, how deeply we're going to penetrate it. And absolutely nothing happened here. I'm not even going to go over what happened over here. But it did break through these 5-minute, this 5-minute demand level. Supply level, or the 15-minute. I think, let's see, the 15-minute. Yeah, it did. So no longer valid. Whoops. This level is no longer valid. Going to delete that. We still have this level on the 1 hour, I believe. Yep, look how we're just respecting the 1 hour. And then we're forming new supply. Now, nothing here. I was looking for an entry somewhere around here, and I did miss it. I missed all my trades today. But I drew all this out because this is supply. Right, we have a drop, base drop. It's aligning with our 5-minute supply level. And then if we drill down to the 15-minute, we have a 15-minute supply level right there. Look at that, right? When we have darker areas of institutional buy or sell orders like this, then that's a really strong level, right? But we did not come into, I had my stop or my limit order right here. All right, back to what I was saying. We have multiple time frame correlations right here. We have the 1 hour, the 15 minute, the 5 minute, and also the 1 minute correlating structure. This is the 1 minute supply level, and you can see right here, touched once, twice, 3 times, 4 times, and then came out, right? On the first hit, look at the first hit, came out, boom. Second hit, boom. Third hit, fourth hit, boom. It's even though it did work out, that is a bunch of hits to a very small time frame supply level. And when you're looking at smaller time frames like the 1 minute or the 5 minute, it usually takes less money to break those zones because it's just a small time frame. If you're trading off of 1 hour, it requires more money to break those zones. So those zones tend to usually hold up more than the smaller time frames just because of the amount of money needed, right? And I'm gonna delete all this because none of these zones are important. It did hit that 1 minute multiple time frame correlating structure. It did not hit that area that I was looking for it to hit. Came in short. But guys, look at what's going to happen right now. I'm gonna keep playing this. This was a potential area that I was looking at. Still, this, even though it is going to be the second hit, well, in this case, when it's a second hit, I would enter on half or halfway through the zone. So like something like this, like in the middle of the zone. Set my stop loss right there or somewhere around here. Add a little bit of buffer and just take my profit on the higher time frame supply level like this. And that's going to be a 1 to 6. I'm risking 1 to make 6, or risking 1% to make 6%, or whatever. $100 to make $600, whatever. However much money you have in the market. But it just depends what you have. But the idea is to make 6 times, or I would have made 6 times more than what I would have been risking in this trade. And that's the idea. I want high probability trades with high profit targets. If it's a 1-to-1, I will not take it. If it's a 1-to-2 trade, I will not take it. If it's a 1-to-3 trade, okay, I'll take that. All right, because profit means more than just getting into a trade. I want a good setup to be a high profitable setup. And this is the second hit. Look how this level held up pretty nicely. Look how all the levels that I drew out held pretty nicely. Like this one held on the first hit, reacted, but on the second hit, boom, just broke through. And then on the first hit on this level, I deleted it, but you can see how it came out and then boom, dropped out. And now the first hit of this other demand level right here, that one, the first hit came out, then came back in, respected the level. We did not break through the level. We just wicked through it, weakening the level. But on the second hit, when we came out of that demand level, we came out hard. And look at that. That's just a huge move up. So that was NQ. That's what I was looking at today. I did miss the 2 really nice setups. Like this one I missed. And then this one I missed. I did take, I think, the first hit. But when I saw it reverse back in, then I knew that it was going to just drop or stop me out. And especially since we're in like a downtrend, so we have lower lows, lower highs, and I was trading a counter trend trade. So risk management is important. Risk management is important in being able to adapt to what price is doing. All right, and I also wanted to talk about GameStop because I did make a GameStop video a while ago and I have not made an update, and I've been wanting to make an update just because of how GameStop played out. I was right with my analysis. Look at my analysis. I don't know where we were last time. I think we were somewhere around here. I had like demand levels drawn out somewhere around here, but all this is just beat up. Especially look at this. Like look at how much time it took for buyers to push this up. And we'll just have a lot of basing candles, basing, impulse. And then we have a basing, and then a huge impulse, and then we just came down after that. And I was saying that we were going to react off of this supply level. And I remember people saying, like right over here at this demand level, guys, buy the dip, buy the dip. I'm like, bro, what are you guys saying? Don't buy this. This is terrible. Do not buy GameStop. It is terrible. Nothing is going to happen. Nothing has happened. Look at all this. This is just, wow. This is just very bad price action. Do not trade GameStop. Look what happened at this level that I said. It dropped, and it came back into this demand level. Look at this demand level, by the way. Impulse balance, impulse, area of institutional buying or area of buyers coming in. Doesn't really have to be institutional. As long as there's a lot of money being put in the market, this is where there was the most money being put in the market, and it shot up. And the first time that we came back into this level, even though this level is a retest of a previous level, that doesn't eliminate our zone. It just weakens our zone. But this zone was strong enough where on the first hit, we came in, we closed inside, and we came right out. Look at that, right into supply, right over here on the daily. Right? Do you guys see that? Supply. I'm going to delete that now because you already know that it came in and then came out. And then we came into this weekly, daily correlating structure. Did not wick through this daily correlating structure. I think that's the weekly. I'm not sure. Oh yeah, that is the weekly. That other level is the daily. Weekly, daily correlating structure. Look at the first time that we came in, we came out. On the second time, we came out. Third time, we wicked through but came out. No, we did not came out yet. So this is technically the first, second, and then third hit. These two candlesticks are the third hit because we did not close outside of the level, so we were just chilling in it. I would not trade that just because it's just multiple times hit, and it's not strong enough, really. I just don't like. Even though it did work out, I would not take that trade. Plus, we also have all this supply zone right here. That is daily supply. We have an impulse, balance, 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 impulse, and this is where we came in. Look at that. That's the first hit. That is the first and only hit. Weekly, daily correlation. Look what happens when we come back into that weekly, daily correlating structure. Boom. Now this would have been a nice little level to take a trade on. Let's see if there would have been enough profit for that trade to go short. Could have taken it right there. That would have been a 1 to 2. Not good at all. If it was something like this, if you expected price to come down all the way down here for a 1 to 5, nice. But look at how it just reversed right back up. So this is why you would like to manage your risk, because let's say you had your take profit down here and price reversed like that. Oh, now you're down to a 1 to 2. I would like to get out at least the 1 to 3 if price were to reverse. That way I could lock in my profits and just continue trading and not lose money or lose the amount I could have made. But anyways, just look how price played out perfectly. If you look back in my other video, you would see that me drawing out stuff like this where I said something like this could happen, right? And that's exactly what is happening right here, right? You can see the pullback, the impulse, the pullback, and the impulse again, lower. All right, so that's going to be it for today. I hope you guys enjoyed this trade recap. I will be doing a lot more of these just because I want to show people how trading works and how you could trade this strategy. And it just works really nice. It works really well. You just got to know, you just have to know how to trade this, and you have to have discipline with your trading, because if you don't have discipline, you can have the best strategy in the world, you will still wouldn't make it so really that far into this. But that's gonna be it for today, guys. If you guys have any questions, make sure to drop down below, and I will catch you guys on the next one.